Accounting equation and Excel. Enter sales receipts for sales basically at a cash register, selling inventory, the cash not going directly into the checking account, but being recorded into a clearing account, and then recording the related deposit form, moving that money from the clearing account to the checking account. Get ready and some coffee because we're learning the accounting foundation, the accounting equation using Excel. Here we are in Excel. If you don't have access to this workbook, that's okay because we basically built this from a blank worksheet but started in a prior presentation. So if you want to build this entire worksheet from a blank sheet, you may want to begin back there or just construct your own worksheet as we go, or possibly just follow along with good old paper and pencil. If you do have access to this workbook though, 4 tabs down below. Example, month 1, practice, month 2. First, a word from our sponsor. Yeah, actually, we're sponsoring ourselves on this one because apparently the merchandisers, they don't want to be seen with us. But that's okay, whatever, because our merchandise is better than their stupid stuff anyways. Like our CPA 6-pack shirts, a must-have for any pool or beach time. Mixing money with muscle, always sure to attract attention. Yeah, even if you're not a CPA, you need this shirt so you can like pull in that iconic CPA 6-pack stomach muscle vibe, man. You know, that CPA 6-pack everyone envisions in their mind when they think CPA. Yeah, as a CPA, I actually and unusually don't have tremendous abs. However, I was blessed with a whole lot of belly hair. Yeah, allowing me to sculpt the hair into a nice CPA 6-pack like shape, which is highly attractive. Yeah, maybe the shirt will help you generate some belly hair too. And if it does, make sure to let me know. Maybe I'll try wearing it on my head. And yes, I know 6-pack isn't spelled right, but 3 letters is more efficient than 4, so I trimmed it down a bit, okay? It's an improvement. If you would like a commercial-free experience, consider subscribing to our website at accountinginstruction.com or accountinginstruction.thinkific.com. To example, in essence, answer key, the month 1 tab being the prior month of operation as we work on the second month now, the practice tab having pre-formatted cells so you could practice the practice problem with less Excel formatting. The month 2 tab, the current month that we are going to be currently working in, used to be called the blank tab, where we started off with a blank worksheet but are basically working within a template at this time. However, we will be adding to that template as needed as we go, practicing our Excel tools and formatting as we do so. Let's go to the example tab to get an idea of what we will be doing. We're on month number 2, recording our transactions into our accounting equation. The accounting equation basically acting as our trial balance. We're now going to enter a transaction as though we're imagining we're at a cash register and we're selling inventory. Now, you don't have to physically be at a cash register, but that's the easiest thing to basically visualize with this type of transaction where we are getting paid at the same point in time that we are in essence doing the work. If you have an online store or something like that, and you require people to pay you at the point in time they order, say, inventory, for example, you have a similar type of situation. So in that transaction, we have inventory that is going to be involved. And so that's going to be one of the issues we have to deal with. Noticing that whenever we have inventory, we have to ask the question, how am I going to track inventory? Am I doing it in the system as you would expect to have if you were at a grocery store, for example, and you were checking out inventory on just a scanner? Then you would see the sales side, but the system would also be recording the inventory side and related cost of goods sold. However, that takes a little bit more time to basically set up. That's the system that we will look at here. But remember that if you have a Shopify store or some kind of online store, you might be tracking inventory in that external website and not wanting to pull all of that added detail into QuickBooks because it'll be quite tedious and burdensome on the software because you'll have a lot more transactions in there related to the tracking of inventory, and possibly because you already have it and the other software, therefore it being redundant, possibly then only adjusting your software on a periodic basis within QuickBooks, basically based on a physical count. You can imagine in a store doing a similar thing. If you just sell stuff and you want a simple system, you might do a physical count and then do a periodic entry into your accounting system to properly record the accounting at the end of the night, at the end of the week, at the end of the month, possibly even just at the end of the year. All right, we have another issue whenever we sell basically at like a cash register or using online platforms where we're going to use intermediaries in order to collect the money, such as credit card accounts, such as a Stripe or a PayPal even. Those problem will be that when I make the sale, I can't really deposit it directly into the checking account, because if I did, then it's not going to actually hit the checking account in the same grouping. So hopefully I get the same money eventually go into the checking account. But if it first goes through the cash register, if it's cash, or if it goes through a Stripe account, if it's Stripe, or a different bank account, a financial institution, if it's a credit card, they're going to combine those together before it hits our checking account. This is a problem we don't often see in book problems, because they just basically say we're depositing it into the checking account, but it's a very practical problem in the real world, because we still have to do bank reconciliations. So we want to, as we do this, we're going to put the way to fix that problem is we put the money into undeposited funds, a clearing account, and then we take it out of undeposited funds and into the checking account when the transaction is going to go into our checking account, either at the end of the night when we take the money out of the cash register, physically go into the bank and depositing it, that deposit accounting for multiple sales transactions during the day, or when the money comes out of the third-party account, like a credit card account that we used not to buy things but to collect things, and or a Stripe account or a PayPal, which are also tools that we used in order to collect the money, which might be grouped together differently by the time it actually hits our bank account. All right, so we're going to try to do that whole thing like at one time this time. So we're going to go back on over to our month one tab, and let's say, okay, on 2/20, we're going to say that we had a sale of inventory at a register. Now I'm going to say at a register because that's the easiest thing to visualize with this problem. But remember, online sales on a website, if you sell inventory and you get paid at the point of sale, you have a similar kind of situation. So we have we're going to say an ELP, which is a type of guitar that we imagine we sell, EPSP. So we can imagine that they walk up to the cash register with these. I'm going to go to the home tab, alignment, or we can imagine that they order them, online, and they're going to pay at that point of sale. Now, what's actually going to be on the price tag, we're going to imagine, whether it be an online or in the store, is going to be $600 for the sales price, not the cost. So I'm going to say if you buy 2 of those, it's going to be $600 each. 2 of these is going to be $500 each. That's what you see like in the grocery store when you buy something. We don't see the cost side, we only see the sales side, but we're going to record the cost side as well as we go. Let's first just record what we do see on the sales side. So we're going to say that the payment is going to be going to not cash, but undeposited funds, the clearing account that is basically the cash, because it's going into the cash register or Stripe or into PayPal. It's going to be 600 times 2 guitars that we're buying. We also have sales tax, which we are imagining consistently through the problem is 5%. Remembering sales tax is going to throw a wrench into the system depending on where you are at. The sales tax is pretty, it's a basic type of tax. You just have to determine where you are at and what type of tax they are applying. In the United States, we have a federal income tax, but you also have to deal with sales tax, possibly on the state side of things, which would be a type of use tax. This is going to be times 1.05. 100% plus 5% means we're going to have to collect $1,260 on it. The sales side of things, we're selling inventory. So on the revenue side, we're going to be here on the sales. This is going to be equal to, we're going to be picking up the 600 times 2. not including sales tax. That comes out to 1,200. The sales tax is off income statement because it's a tax. We're not collecting the revenue. It's not revenue to us in theory, but rather we're just the collecting agent. Therefore, we put it off income statement on balance sheet. Sales tax payable is going to be equal to then the 600 times 2 times 0.05, 5%. Looks like this. It's the 600 times 2 times 5%, 0.05. Let's see if that remains in balance. It's not going to because the undeposited fund, wait a sec. Yeah, it's not going to because, no, it should remain in balance. Let's do it. Let's copy it down. We'll see it. We'll copy this down and copy this down. I could just do these at the same time. That's faster. Más rápido. Más rápido. So if I add these two up, so that looks good. Assets equal liabilities plus equity. All right, let's put zeros across the board just so we see where we're at. Although I still need to record the deduction in inventory, but the zeros give me a marker kind of what line I'm in, which sometimes is useful. Okay, and let's actually do the second one at the same time so that I can then go to our subledger and do the other half of the transaction together. So the other one, we have undeposited funds is going to go up by 500 times 2 times the sales tax, 100% 1.05. 105% means we're going to have to collect 1,050. On the sales side of things, this is going to be equal to the 500 times 2. So we're going to get 1,000 on the sales. The difference being the sales tax, 5% of the sales price. So we're going to say this is going to be equal to 500 times 2 times 0.05%. Let's double click on that to check it. So this is the sales price times 2 times 5%, otherwise 0.05 in decimal format. Let's put the zeros across the board. Zeros across the board. Zeros across the board. And okay. So now I'm going to put this, I want to put this on the bottom and then split the screen so I can go up to my subledger and see what the cost is and properly record the cost. So to do that, I'm going to go to the View tab up top. I'm going to unfreeze the panes to start with and then scroll back down again because I want this at the bottom left. So that looks pretty good. And then I'm going to put my cursor on this little skinny and go to the View tab and split the panes. So now I can see this down here, but I want to maneuver up top. So I'm going to click up top, scroll up, and then I'm going to scroll all the way to the right. So now I can see this journal entry and I can see my information up top with my subledger. So now I'm going to say that there was a sale of an ELP on 2/20. Maybe I can even do this with a journal, with a formula, 2/20. And the units that we sold are 2 units and they cost us not 600, but 400. That's the cost of them. This is what we do not see on when we check things out at the grocery store. We don't see this, the cost. So let's put a -2. I've been doing that before. -2. So that means if I pull that out to ending inventory, -2, 400, -2 times 400 is 800. I'm going to put an underline here, home tab, font group, underline. And then the total, how many units do I have left? 5 minus 2 gives us 3 at 400. So we have left 3 times 400. I'm going to make this bit green because I need to pull that into my journal entry, that 400. I'm going to make it light green. And the other one is an ESP. Where is that? That one's down below. So it's down below here. So I'm going to say the ESP is equal to the 2/20. That's the date. And then the units, we sold 2 of those. The cost is not 500, but rather this is going to equal the 480. And let's make this one the negative. Multiplying that out, 2 times 480 cost 960. Pulling that to the inventory column. This is going to be 2 times 480 putting an underline underneath. And this is going to be subtracted. We had 6 units minus 2, 4 units remaining at 480. So this equals 4 units times 480 gives us 1,092. I'm going to make this green so that I can see that when I record this into my journal entry. All right, so now that that's there, then I'm going to go up to the View tab, split, unsplit, and then scroll up to the top so that I'm on cell A4 and go to the View tab and freeze the panes so that I can see that top. And I have been, by the way, unfreeze, because if I want to see this top number, maybe I freeze it like down here so that I could still see the prior month numbers up top. So that might be useful. Might be a little confusing, but still might be useful. So anyway, so then we're going to go down here and say that on this one, the inventory needs to go down by -2, not times 600, but the 400. I want to do it with a formula though. So I'm going to say times, and then I'm going to scroll all the way to the top, all the way to the right, and there's the 400. So the ending result should give me 800, right? So I'm going to say enter. That should give me 800. That looks good. The other side of that transaction, because it threw me out of balance here, is on the income statement for cost of goods sold. This is going to equal that same 800. So the impact on net income, we can see the 1,200 when we check something out in the grocery store. We can't see the 800, but it's there and being recorded when we scan it, and that comes out to a difference on net income of 400. So let's do that for this one. This is going to be equal to -2 times, scrolling all the way up, scrolling all the way to the right to get to my subledger. The other green one is down below here. So there it is at the 480. That should give us 960. So enter. So that should give us, what? Yeah, there it is, 960. Donde, where are you? Where did you go? And then we're going to say this is going to be equal to the 960 on the other side. So 1,000 minus 960 is net income increase of $40 for that one. Okay. And so that should keep us back in balance. So we're still in balance over here. That is good. Let's bring down our balance now this way. And let's put an underline first. Let's put an underline under these all the way across. Oh, now I picked 2 of them. Dang it. Just one row at a time, one at a time. Home tab, font group, underline. And then I'm going to undo the underline on these ones because I don't like to have it on those values. Undo the underline there. Okay. All right, now we bring down the balance equals the sum of the prior balance plus the current activity. We will copy that all the way across. Copy that, Roger. Pasting it all the way across, pasting it with the formulae. And then again, I'm going to copy down here and here so it's not in those 2 cells so it doesn't mess that up. So that gives us then, if I copy this down, I'll select the whole thing and just copy that down. Boom. So I'm holding down Control to select the non-adjacent cells. Home tab, font group, underline. So we're still in balance here. Let's double check this number now to our sub ledger. So to do that, what I'm going to do is I'm going to scroll up to the sub ledger. I'm going to memorize it first, 7938. And I'm going to scroll up 7938, 7938, 7938. And there it is, 7938. This number is summing up all of this, all of the ending numbers in our subsidiary ledger. So I want to adjust my check figure now. So this number is this number minus what's on my general ledger, which I need to fix. So I'm going to change that, put my cursor down, and go all the way back to the last number in my general ledger kind of info, which is right here. Boom, 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 boom. And so that, and just to show that those 2 are the same, I get the green 0. So it's like, okay, everything is good. I'm going to ungreenify these. Let's make it back to blue. Bring it back to blue, baby. Back to blue. Right click, ungreenify, back to blue. And then we're going to go to the left and let's do it again. Otra vez. This time we had another sale at the cash register or on our website, a sale of inventory. And this time we sold an ERP. We sold 3 of those. And then a DIUSA. We sold 1 of those, a GIUSA. And then we sold a DUC, which is a ukulele, 2 of those. And then how much did they cost? What's on the actual website as the sales price or on the ticket on the price tag? $550, $380, $32. Let's record just the sales half and then we'll do the inventory. So we sold, it's going to go into undeposited funds, $550 times 3. That would be the sales price, but I have to also multiply it times 1.05 because there's a 5% sales tax. 100% plus 5% is 105, 1.05. Then on the sales side of things, this is going to be equal to the 550 times 3, not including the sales tax. And then the sales tax off income statement is going to be here, sales tax payable equaling the 550 times the 3 times 0.05. Not 1.05, but just the 0.05. The sales price times the 3 guitars times the 5%, 0.05. All right, let's do that again down here. Let's copy this down first, see if I'm in balance. We'll just go all the way across, copy that down. Am I in balance? Yes. Let's do it again then. For the Gibsons, this is going to be equal to 380 times 1 of those times 1.05. So that's going to be what we're going to have to collect. And then on the sales side, this equals just the 380. I don't really have to say times 1, but I'll just times 1, no sales tax, times 1 because there's 1 unit that we have, which you don't really need to put in the formula, but I just want to be consistent. Sales tax 380 times 1 times 0.05. So that's going to be the cost times 1 because we had 1 unit. Sales tax 0.05, 5%. All right, one more time. Otra vez. The ukuleles. We had 32. These are the diamond ukuleles times 2 of those times 1.05. So we're going to collect 67. Sales price is going to be equal to the 32 times 2, not including sales tax, 64. Difference, sales tax payable, equaling the 32 times 2 times 0.05. Checking that out. The sales price times 2 of them times the 5% sales tax, 0.05, 5%. Okay. Let's put zeros across the board. This time it might be easiest to put the zeros on the top row and then copy them down so we can see where those are at. And then boom, boom, zeros across the board. And then I'll just copy these down. I'll select these, copy them down, boom. And then I'll select these and just copy them down, bam. And then I'll select these and just copy them down. Boom. This, I can go across the barrier here because that's fine. And I'll copy those down. And then this one, I'll just copy that down. All right, we're in balance, but now we need to include the sales side. So I'm going to go to the ledger again, the sub ledger. So I'm going to go to the view tab and unfreeze, and then try to put this journal entry on the bottom again. And then so as that's on the bottom, and I put my cursor in the little skinny cell, and then view window, split the panes so I could see it down here. Then I click in the top pane, all the way to the top, all the way to the right to see what we sold this time. We sold an ERP. That's over here. So that's in column BL. I'm just going to say this equals on 220. We sold units, 3 of those, And the cost is not 350. We bought them for 440. So let's put a -3 is what I've been doing. -3, 440, 3 times 440, bringing that to the end. -3, 440, -3 times 440, underline, home tab, font group, underline. So now we're left with 5 minus 3 is 2 at 440. So we're left with 2 times 440, 880. Let's make this green so I can find it easily when I do add it to my journal entry. And then we sold a GIUSA, so that's the next one to the right. So this one we sold, that's in cell or column BW, equals 220 units. We sold one of those. They cost not 380, but rather 304. Let's put a -1. So this equals -1 times 304. Wait, that's in the wrong column. -1. This is where the 304 should go. And this should equal -1 times 304. Bringing that to the ending inventory, we're going to bring it down by 1 unit. 304 is still the cost. -1 times 304. Underline. Home tab font group underline. We had 5 units. Sum 5 minus 1 is 4. They cost 304. That means we have 4 units times 304. I'm going to make this green so I could see it when I enter that into my journal entry. And then one more down below, the ukuleles, 220 units. We sold 2 of those. They cost not 32, but 24. So now this should be a -2, let's say. This equals -2 times 24. Ending units then is going to go down by -2. 24 is still the cost. 2 times 24, underline, we had 4, sum 4 minus 2. We have 2 left. They all cost $24. 2 times 24, we have $48 worth of 2 ukuleles left at cost. Let's make this green so we could find it. And then I'm going to go to the View tab and unsplit. And then I'm going to go to the top again, put my cursor in cell A5 so I could still see those beginning balances from the prior month. And then view and freeze the panes. And then we'll scroll on down and I'm going to add then the decrease of the inventory. So with the ERPs, I'm going to say this was -3 times the cost, which I'm going to get from my subledger by going all the way to the top. I'm looking for the ERPs, which should be green. Subledger, there's the ERPs. ERPs, 440, that should give me 1,320. It does. Other side is going to be on the cost of goods sold, which is going to equal the 1,320. So that means we sold them for 1,650 minus 1,320. Revenue went up net 330. So now we're going to say, let's do the same for this one. This was a GIUSA equals, we sold one of those times, scrolling all the way up for the GIUSA, should be green over here. So there we have it. It's right there. There it is. So I'm going to pick up the 304, which should give us 304. I need to make it negative though. Negative, por favor. And then we're going to go on the other side, cost of goods sold. It's going to be the 304. So now we sold these for 380 minus 304 cost, 25 increase to net income for the sale of those items. And then finally the ukuleles, the DUCs, are going to be equal to -2 times the cost, all the way to the ledger again, looking for the ukuleles, which should be green over here. And where did the ukes go? There they are. So there's the UC 24 should give us 48 total. There's the 48. That makes sense. Other side is in the cost of goods sold. Boom. Equaling the 48. So we sold these for 62. They cost 48. Net increase to net income 16. All right, let's put a underline across this whole thing. Underline across, home tab, font group underline, and then I'm going to get rid of the underline on these two. No underline there. And then we'll bring down the balance. Bringing down the balance, which is going to be equal to the sum of the prior balance up here plus the activity. We'll copy that across. I'll just copy it all the way across, but paste it just the formulas so it doesn't mess up the formatting. And then we'll copy down so these cells don't get messed up. Copy those down, ba-boom, ba-boom. Okay, does that put us back in balance? It should. So now our assets are at 226,305. Liabilities are at the 74,465. That red should turn green. If I copy this down, 158.40. I'm going to put an underline here. All right, that's good. Now what I'd like to do is once again double check my inventory. My ending inventory is at 2622. Does that tie out to my subledger? Or sorry, 6266. Dyslexic man. 6266. Let's put this, okay, so here it is, 6266. I'm going to go into my check figure and reassign this one. So this is going to now be our latest number in our account. So it should be this number as our check figure, 6266, enter. So green zeros, we're back in balance. Let's ungreenify. Now completed the process 4, making them a return to beautiful blue. So beautiful blue has been returned. And boom. Okay, all the way back to the left and scrolling down. All right. So now we've got this money in undeposited funds from both of those transactions. Notice that if these were two transactions that happened, I can imagine cash going into the cash register, although that would be a lot of cash if it was a cash sale, 2,310 and 4,509. Or if it's an online sale or a sale on a credit card or something that's going through a Stripe, that again, we had two separate sales that were for 2,310 and 4,509. Now, if I got paid with a check, the check would go directly into my checking account in those same dollar amounts. But of course, if it's cash, I'm gonna get my bouncers, I'm gonna get my bodyguards, and we're gonna brave the streets of crazy California, and we're going to that bank and hoping we don't get robbed. But we still, if we do get robbed, we beat them up with like those foam noodles so we don't hurt them, so they don't sue us when they were trying to rob us. And then we have to stop them with a foam noodle just so we don't, so we get thrown. So then but if we're online, it might go through the credit card, which once again, it's going to be grouped together, or through PayPal or through Stripe, which once again might be grouped together before it actually hits our bank account. So now we're going to group them together, solving that problem so that I put it into the bank account in the same grouping as is going to be hitting my bank account physically, and that'll make the bank reconciliation easier. If we find ourselves having to add together multiple deposits in our bookkeeping in order to tie out to the bank statement, we probably could do a better system with the use of undeposited funds. We shouldn't have to do that. The bank rec should be easy. Okay, so then we're going to say this is going to be equal. By the way, this is also a problem that comes up even if you have bank feeds, because it depends on the industry you're in. A lot of times you'll hear people say, well, if you have bank feeds, then everything's going to be automated and you don't have to deal with some of these problems. But you're still going to have to deal with them if you can't record the revenue based on the bank feeds, but rather you have to record them as they happen because you have these clearing accounts that you're going through, or credit cards, or the cash register. That's going to throw a wrench into the system. So again, as we get into this more modern technology, it doesn't solve all the problems. It actually, it just changes things a little bit, and we have to know like where those things fit, right? And it changes the terminology a little bit. So in any case, So we're going to say this is going to be a deposit from clearing to checking, we'll call it. Okay, and so what we're going to do is I'm just going to take the money that's in the clearing account. It's going to be negative 4509, imagining we're taking that to the bank at the end of the night and going to deposit it as one lump sum, or that's the amount that came through the credit card or the PayPal that we're going to put into our checking account. Where am I going? And the other side is going to go right here into the cash, which is our checking account, negative of that. Cash goes up, undeposited funds go down. Why did we need to do this added step? Because the bank statement is going to show this number, not these two numbers, right? Not these two numbers. So, and that'll help us with the bank reconciliation. Let's put zeros across the board. Zeros across the board. Zeros across the board. Then we'll underline the whole thing. Put an underline, home tab, font group, underline, and then I'm just going to copy down these ones so that it doesn't have an underline on those ones. And then we'll bring down the balance. Bringing down the balance, baby. We're going to say this equals the sum of the prior balance plus the current activity. We'll copy that. Paste it all the way across, but paste it only the formulas so it doesn't mess up the formatting, the colors. So there we have it. The colors have meaning, man. You can't just mess up. These aren't just like, it's not like some crazy person just dyeing their hair multiple colors that doesn't have any meaning. It's just like crazy, which you could do that if you want. I'm not like, but I'm just saying there's a purpose here. You have to keep the color scheme. So I'm going to copy this down. We're going to copy this down. And then no impact on the journal entry because one asset went up, other asset went down. Although accounts were impacted, checking account went up, undeposited funds went down. Let's put an underline here, home tab, font group, underline. And then there we have it. Okay, so that's going to be it. Our subledger ties out. That's the general idea. So we can see how tedious it is to track the subledger. And again, software can help us with that, but it's not a perfect system for the software to help. You really have to think about what kind of industry we are in and how we want to basically deal with the inventory issue, which is an area that you can think of specializing in or possibly avoiding some industries, making sure that you don't let the clients push you around, right? You got to say, hey, no. They're going to be like, well, you don't want to take, my business isn't good enough for you. And it's like, no, it just doesn't fit. It doesn't fit what I'm trying to do here. You don't understand. I got a whole system. The thing has to fit in this, right? And so so inventory is one of those areas where you might want to, think about how you're going to specialize and deal with it, what kind of industries you want to be in, what kind of clients you want to be picking up.